Lehman's got a real business, so to suggest that Lehman's going to go out of business is a real stretch.
That was what Oppenheimer & Company's Meredith Whitney told me just 2 weeks ago, and in a move partially intended to fend off increasing short sellers, Lehman Brothers is making a $4 billion preferred stock offering, increasing capital and strengthening the balance sheet. In another CNBC exclusive to talk about the details behind this move and the benefits for the firm and investors, Lehman Brothers Chief Financial Officer Erin Callahan joining us once again. Erin, good to see you. Thanks so much for joining us once again on Closing Bell.
Thanks, Maria. Good to see you. A little quicker than expected.
I know that. A lot of talk about this latest raise. Tell me what was behind it. Why did you raise this additional capital?
Yeah, I think for some it was surprising. As little as a week and a half ago, we were talking about that we did not think from a corporate finance perspective we needed to raise additional capital for our balance sheet. Unfortunately, I think, as you know well, Maria, we're in a market where perception trumps reality. So despite the fact that we got through our earnings call well, our stock rebounded. We think we distinguished our business model in every way that was appropriate from the risks that were associated perhaps with Bear Stearns. We did see last week that, again, we in particular, and it's an industry-wide issue, but in particular came under, I think, the white-hot lights around rumors and suppositions with respect to the strength of our firm. And so as opposed to waiting to see how that played out, we felt it was necessary and aggressive to make a firm statement. We brought the deal together quickly with a handful of very strong investors who are longtime supporters of the firm, and we basically went out with a transaction that we think really endorsed the value of the company, the strength of the franchise, and I think you're seeing in our stock price performance today that that's supporting the case.
But what was the turning point, Erin? A lot of people, you know, I was on the phone earlier with various Wall Streeters, and they say, look, you know, she was on your show 2 weeks ago, just like you just said. They said, you know, we don't need any new capital. What was the turning point? Did you see, were people trying to make a run on the bank? Tell me what specifically was happening. I know you're saying that there were rumors and the shorts are out there. It can't only be that, though, can it?
Well, it was an escalation of those rumors. It was an escalation of the impact of those rumors on our clients and our counterparties. It was the observable volume change in our stock. We trade on average 15, 16 million shares a day. It went up to as high as 200+ million shares a day. And it was a slow drift downward and underperformance of the stock versus our peers. And we didn't want to wait for it to get to a point where we really were in a wholly defensive mode. So we felt like we had to get out in front. We talked to our key investors. They understood the point that there was dilution that would come from the transaction, but the stronger statement about the confidence in the organization was critical. Another thing I'd just like to add to that, Maria, is that it was critical also how we distributed the deal. We distributed it to those investors who were not going to short the stock nor buy CDS protection against it. So it was all a very closely executed, closely and carefully cautioned transaction for us.
So clearly you have now dry powder. Tell me what you do with the money. Is it time to make asset acquisitions?
Yeah, I think I've been articulating pretty clearly over the past couple of weeks that we've been on a path to delever the firm because we thought it was prudent in the environment that we're in. Again, I think an industry-wide phenomenon on deleveraging. So we had a target to take leverage down a couple of turns towards 13 times on net leverage. Clearly, this accelerates that outcome. We're already there with the successful close of this capital raise. But that doesn't change our basic strategy that we want to continue to move illiquid assets off the balance sheet. What it does allow us to do, though, I think, is be competitively positioned with the opportunity to be aggressive on both the investment banking side and doing the business we want to do with our clients and using our balance sheet for our customers, which is the foundation of our franchise. So I think we are in a great spot now with this capital behind us with wind in our sails around going forward.
Erin, talk to me a little about the terms. Some people worry there's real dilution here for the existing shareholders.
Well, look, you know, on a nominal basis, there's 10% dilution. If you assume any kind of reasonable reinvestment return, it's 5% dilutive. And I said, I think the stock going up today really reflects that the dilution concern is minor relative to the statement of confidence in the franchise and the organization.
Let me ask you about this SEC letter that came out on Friday, Erin. Opaque language, certainly, but a lot of people saying, well, maybe there was some suggestions that we actually have seen a bottom. Have we seen a bottom?
Once again, don't want to be nor am I the right person to call the bottom. But I think in terms of how we're operating as an industry, it's important for all of us to be conscious of the perception and confidence issues around our space and to get our house in order to address that. And I think the sooner that we do that as an industry, the better. It feels like that's in motion and that's happening. And so I think that, hopefully this is a moment where we start to see some upside.
Let's talk about sort of what's happening in the market. And of course, I know you heard the conversation earlier on CNBC about Lehman talking to the SEC about what is it going to do as far as the shorts out there and putting an end to some of the rumor mongering that in some cases is not true. What kind of conversations have gone on?
Well, the SEC, I think, which is well known, is engaged in an investigation about short sellers in the market. Clearly, we have an obligation to our shareholders and as members of the financial community to share the information that we get on that topic, which we do. Again, I think this is an industry-wide issue. I do think it would be fair, and this is a consensus view at Lehman Brothers, if we had some kind of disclosure rules with respect to those selling short, as we do with those who are long investors in our stock. But I think the SEC is on the case, and we're playing the role that every member of the community is playing, which is sharing the information that they request from us.
What kind of demand did you see, Erin, when we were talking last night after the offering was announced? We were talking about, an increasing amount of interest from investors. Tell me what you saw in terms of demand.
We saw about, all said and done, about $14 billion of demand, and that was in the context of getting the message out loud and clear that we'd actually end up with very little additional stock to allocate, given our desire to stay with our anchor investors who had come to us and stayed loyal to us. So $14 billion of demand without much of a marketing effort, I think, is a testament to the belief in our franchise and our management team.
That's pretty extraordinary. Now, some people might say, look, if they had $14 billion waiting there, how come they're not raising it?
Well, there is a balance here. There's a balance between how we can effectively and efficiently deploy capital and to our existing shareholders and how we manage our balance sheet. So with a market cap of $20 billion as we went into this, raising $4 billion or 20% was a pretty reasonable size, I think, to get the confidence statement back into the equation, and that's how we sized the trade.
As far as looking ahead, Erin, is it fair to say that we are going to see several more quarters, having said all that, of write-downs and losses having to do with mortgages?
Look, I think it's fair to say, as I was hopefully quite clear on a couple of weeks ago, that the market environment continues to be very challenging. So I think we should anticipate that will continue to be the case. It certainly could last for at least a couple more quarters. And I think having a strong capital base and foundation to weather the continuing storm is the way to go forward.
All right, Erin, we'll leave it there. Great to have you on the program.
Thanks for
As always,
me.
We appreciate you talking with us about this important latest raise. Erin Callahan is the CFO of Lehman.